Hey guys, I've got a little bit of information for you about this brand new $250 banking rule. And it's just been confirmed by the federal authorities. And if you're receiving Social Security, a pension, or any government benefit, it directly affects you and your money right now in 2026. But now, before you start to worry, stay with me because, guys, what I'm about to share is actually really good news for you personally and your retirement. Okay. But there are details in this video that most people are completely missing them. And missing them could cause you to be confused as far as what's happening to you and your bank account. Guys, my name's Mark, and I am with Retirement for Seniors. I'm glad you're here. Today, we're breaking down exactly what this new federal banking compliance update is, what it means, who it impacts, and the 3 practical steps you need to take today to make sure your benefits stay safe every single month. Now, here's what most people get wrong. When they hear a new banking rule and $250, they immediately think, is my money being restricted? Are they cutting my benefits? And guys, the answer is no. This is not a cut to your Social Security, and it is not a new fee. It's not a restriction on how you spend your money. Now, what it is positive. This is one of the strongest layers of financial protection for the senior community that the federal regulators have ever put in place. And given what's been happening with fraud targeting our older Americans just recently, the timing could not have been more important. Now, here's something that should make every senior sit up and pay attention. According to the FTC's most recent report, older Americans lost approximately $10.1 billion to financial fraud in 2024. Now, alone, that number could be as high as 81 billion when you include the unreported cases. And here's the part that makes it personal. Scammers are not random. They are strategic. They are hitting your accounts because you are just right for picking. We're going to go over how you can do some changes in your life, and hopefully you're not a victim. Now, they know exactly when your Social Security deposit hits in your account. They know when your pension arrives, and they time their tax to happen within hours of the money landing in that account so that you don't have a chance to check your balance, and it happens quickly. Now, tech support scams, number one. This is one of the top scams alone cost seniors somewhere around $159 million in 2024. And that's the most common thread in every single scam is the urgency of it all. Now, they create panic. They manufacture fake deadlines. They pretend to be members of Social Security or Medicare officials or even a grandchild in distress. Now, federal regulators saw this pattern clearly, and they responded with this update frame. What it means is the $250 monitoring threshold is now one of the core tools being used to interrupt the attacks before they do the damage. So how does this rule actually work? Well, banks are now required to apply what's called enhanced monitoring procedures to certain transactions that meet or exceed the $250 under specific circumstances. Now, your routine transactions, your grocery store withdrawals, your utility payments, your prescriptions, those all continue exactly as they always have. The system is not watching what is considered normal behavior. It's scanning for patterns that fall outside your established account. All of a sudden, you're getting 3 or 4 $500 gift cards. Well, that would trigger an inspection. And just to be sure, that's what the protection is supposed to create. Your account has shown consistent money activity for years. Steady deposits coming in, steady bills going out. That is your financial fingerprint, and the bank systems realize it. Now, imagine someone gains access to your account after your Social Security deposit arrives and attempts to initiate several random transfers to unfamiliar accounts in the amount of, say, over $250. Now, that's exactly what this rule is designed to catch and pause before those funds disappear. And for the overwhelming majority of seniors on a fixed income, you really never even notice that this is happening to your account. It operates entirely in the background. Okay. Now, let's talk about Social Security specifically, because I know it's on everybody's mind. Your retirement, your disability payments, SSI or SSDI, are still processed on the exact same federal deposit schedule. If you receive your payments on the second Wednesday of every month, that does not change. That's so important for you to understand. Nothing changes. If you receive it on the first of the month, it doesn't change. Okay. The $250 banking rule does not touch payment amounts. It doesn't alter eligibility. It does not shift the deposit dates. What it does is add a layer of oversight after those funds land in your account, making the period immediately after a deposit safer than it's ever been before. This rule exists strictly in the background as a guardian. It is not an obstacle. Okay, that's real important so that you're not concerned. This is actually a really good thing. All right, now here's the part most people miss completely. What happens if one of your legitimate transaction gets flagged for review? Number one, don't panic. If it happens, it will happen very rarely for people with consistent account behavior. Okay. But when it does happen, your bank is required to update the framework to notify you promptly and clearly. Okay. So you will either get a phone call, you will either get a text message, you may get both, just depends on how you're set up on your banking system. You may want to activate notifications coming from your bank. Very simple to do. Ask your kids if you don't know how to do it on your phone. Okay. Now, you may receive a call or a text alert or secure message through your online banking portal asking you to confirm the transaction. Okay. You won't have to deal with people. It'll be a quick yes or no. You press the button and it confirms it automatically through the bank's secure process. And it will confirm the transaction was authorized by you personally. Okay. The review is resolved quickly. In most cases, your funds remain intact throughout. Now, this is really important. If you've ever received a call or a message claiming to be from your bank and you did not initiate that contact, hang up and immediately call the number on the bank of your debit card. Okay. Directly. Never, ever provide personal information in response to a contact you did not start. Now, guys, where things can sometimes prompt a review is when a new authorized user makes different types of transactions or transfers that are unfamiliar in quick succession. Like I said earlier, getting $300 or $500 gift cards. Okay, all in quick succession. If you recently added someone to your account or your banking patterns have legitimately changed, it's worth stopping by your branch, having a brief conversation with your bank representative so your account history is understood. So during the holiday time, if you like to give multiple checks for a high dollar amount, $250 and more, then you may want to call your bank and say, look, around the holiday time, I'm going to be making several $250 or $500 or $1,000 gifts to friends or family. Okay, those will be accepted, no problem. That clarity always protects everyone, and it makes it easier for the bank to distinguish between legitimate activity and unauthorized access. All right, my friends, let's bring this home with 3 simple steps you can take today. Number 1, review your bank's current alert system. Most institutions allow you to set up a real-time notification for deposits and withdrawals and transfers above a certain amount. Activate those alerts so you're informed quickly, and you can document all the information when it's happening within your account. Number 2, confirm your bank has current contact information on file. Like I recently have changed my phone number because I used to get all these Medicare scam calls. Now I haven't gotten one. That may be something you want to do. All accurate and up-to-date information must be verified with your bank, okay? Since the bank is now required to notify you promptly when a review is initiated, having that correct information is very, very important. And finally, number 3, keep it simple. Keep a record of your regular monthly expenses, nothing complicated. You could write it down. You can post it on a spreadsheet. You can keep it in any one of the money manager accounts like Quicken. Okay. Just a basic list of the bills you pay, the amounts and the dates typically that you make those payments. Now, if a transaction is ever reviewed, having that information referenced and on hand makes it easier for you to converse with your bank. It also gives you a quick way to spot anything unusual that's in your statement each month. Now, these small habits make a meaningful difference in your financial security over time. All right, let's bring this full circle. Retirement is supposed to be a time of stability. You worked for decades. You contributed to your Social Security. You made financial decisions with your future in mind. You deserve to receive that income without interference. The $250 banking monitoring rule is one piece of that larger promise to be fulfilled. It's protection. It's not restriction. It's progress, not a penalty. If this video gave you clarity, please consider hitting that like button right now. Also share it with someone in your life who needs to hear this, maybe a family member, maybe your spouse or significant other. And if you want to stay up to date with every security update, every Social Security, every banking change and senior benefit in 2026, be sure you subscribe using the link down below. Hit that notification bell so you never miss a video. All right, my friends, that's it. My name's Mark. Retirement for Seniors. I'm glad you stopped by, and we'll see you in the next video. Take care, my friends. You may be interested in this video. Check it out.